Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Thursday, July 15th, 2021. And our top stories today, we're going to have some financial lessons on managing debt and talking about cryptocurrency basics. Well, joining me now to discuss this and a lot more is Joseph Gallant. He's a CPA and also a financial counselor at Central Piedmont Community College. Joe, it's great to see you. Thanks so much for joining us on the program this morning.
Good morning, Jeffrey, and thank you for having me. It's a lot of fun to be here, and I'm looking forward to our discussion today.
Yeah, it's great to chat with you. And look, I want to get into some really important topics that you and I have talked about offline. But before we begin, why don't you just describe your role at CPCC? Because you're a financial counselor who actually works directly with the students.
Yes. Financial education, I don't like the term financial literacy, because when you say, oh, you need to get some financial literacy, it kind of, I think it's demeaning in a certain way. So I prefer financial coaching. There is so much in the financial world that has to be explained that just isn't intuitive. And that, so I spend time with students who just need some basic budgeting help. But last year, as I was talking to students this way, I discovered that because of the changes in the economy, that many of them had lost income from different types of jobs that were now closed, and they were trading in the markets using, and I'm all for it. I think it's great to get knowledge, but to actually being involved in the markets themselves, understanding what you're in is an entirely different thing. In a market like now with the Federal Reserve doing quantitative easing and so on, it's going to lift the markets in general. And it's easy to make money when the markets are a rising tide. It's what happens later. And to explain to folks that these trading profits that you're seeing now may disappear. And now we have to work on actually putting you into how do you live from month to month and building a budget, getting you set up in retirement savings, emergency savings, and managing your debt and increasing your FICO score. That is my role within at CP, is to help them understand the processes and the best way to achieve it.
Yeah, and that really important role. And we often talk about financial literacy on this network. And it's great to have someone with your experience and level of expertise really guide. And I wish I had, I had my parents to guide me, but I wish I had someone like you at my university to guide me. Joe, we're going to do, and for the audience, we're going to do kind of a little bit of a lesson here. We'll finish out segment 1 with a lesson on managing debt, really important. And in segment 2, we're going to tackle cryptocurrency, what it is and what it isn't. So Joe, let's start off with managing debt. What are the different types of debt that and students, I'm going to pretend to be a student, I'm a student of life. What type of debt should we be thinking about?
Well, the largest debt that is in front of students is the student loan debt. And student loan debt for the lender is absolutely wonderful because you really can't default on it. So it's almost defaultless debt to the lender. But to a student, it's very easy to run up thousands of dollars in debt. And the first thing I would say to them, only borrow for what you truly need. Do not borrow for lifestyle. That is one of the things. I mean, in general terms, when we're looking at student debt at this particular time, the average student debt is $46,800, which is astronomical to come out of school and now have to begin your life. That kind of debt. I've also seen students in trouble with credit card debt, or they'll have debts that they've taken out that they haven't paid, and working with the credit rating agencies to try and figure if there was a mistake or if there was something that we can do to mitigate the circumstances to help them improve their FICO scores, because that is such a major key to just financial success overall. It affects everything from even the automobile insurance that you're able to buy in at what prices to being able to get a home. So it's very involved in that. And there are two types of loans that I wish students would just forget about. And one is the payday loan and the other one is a title loan. Payday loans give you, oh yeah, it's just 1% a day. That's 365% annually. That's a huge chunk. I mean, when the mafia did that, it was illegal. Now there are businesses that can do it, okay, and they're licensed by the government. Title loans are about 300% APR. And when you think about what you're risking, the amount of time you have to work, there, if you can find any other way away from those two vehicles, I would truly recommend it. One of the key things, though, in debt is if you take it on, and you do, it's how do you manage it? How do you make it work within your budget? Had a student who came to me. They had a pet that needed surgery. They did one of those $5,000 loans through that no credit checks, and it just went on. The person couldn't believe that their FICO score went down 65 points once they took it. And they didn't understand that, well, when you take out a $5,000 loan, which is your credit limit, and you max out the $5,000 borrowing, you have affected your credit utilization on your FICO score, which is immediately going to make it go down. Never mind the pull on it, how many times you apply for credit. And so that there are effects that happen when you use credit. And how do we make that work? In this particular case with the person, they had 9 months to pay it off with no interest. And she took a second job to be able to do that. That is managing debt, rather than letting the debt manage them. And an example would be like, even on your credit card, if you have a credit card bill that's outstanding, generally the minimum payment is going to be 1% or 2%, excuse me. So on a $5,000 charge, you're talking about $100 a month. Well, it's really kind of frightening. Depending on your credit score, if you have a very good FICO score, 760 or so, you might have an 18.6% interest rate. If you have a good score, it could be 20%. And if you have a fair score, it's 23%. Well, when you take that same $5,000 borrowing and you pay the minimum payment, it can take you anywhere from 8 years to 16 years to pay it off, depending on your FICO score. And that is where the debt owns you, and it's managing your life. Rather than, how can I minimize this? What can I work in my budget? And yes, there are things. Life's a trade-off. You're going to have to make compromises. I can't do this if I take out this loan. And that is really, it's a matter of just seeing the reality that we can't have everything we want. You can't have your cake and eat it too if you haven't paid the price for the cake.
Yeah. And Joe, I mean, it really, there are certain principles in finance that we all have learned. It's the power of compounding. Making a minimum payment actually is compounding in reverse in the favor, by the way, of the credit card company. Last question, and I only have about a minute before we go to commercial break. You hear a lot about debt consolidation, people who have multiple credit cards, rolling that up. Is there a benefit to doing that if you're a young person who has multiple credit cards? Maybe you got yourself into a little bit of trouble. Can that be a benefit, or is that a detriment? And again, we only have about a minute. I apologize.
The debt consolidation, if you're going to do a private loan through a bank to consolidate debt and so on, you've got to tear up those credit cards, not use them. You just pay down the loan. If you're using a debt consolidator, which will take all of your debt and try to mark that off, the detriment to that is it is going to destroy your credit score, because they withhold payments from all your creditors and try to negotiate with certain ones. And on the other side is that there may be a taxable part of that transaction, because when a company forgives debt, it's basically granting you income. And if they issue a 1099 COD, you're going to find yourself having to report that on your taxes and pay taxes on the forgiven debt. I'm not a fan of debt consolidators. If there's ways that you can work things out through either the debt avalanche or the debt snowball, whichever one you prefer, or you have a financial counsel that can help you with that, I would recommend those ways first.
Yeah. Well, thanks for that, Joe. Joe, we're going to take a very quick break. Again, these are very abbreviated segments. Joe does a much longer session with his students, but I think it's great for the audience to hear. Joe, when we come back, we're going to tackle cryptocurrency. What is it? Does it have intrinsic value? You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Joseph Gallant. He's a financial counselor with Central Piedmont Community College. Joe, thanks so much for staying with us this morning.
Thank you again for having me.
Yeah, it's great to talk with you. And look, I really enjoyed the lesson. You know, even at my advanced age, I don't know it all, and I'm learning just like a student would be learning. And so whether you're a young person or a mature person like myself, and you've got to keep learning and evolving. So thanks for that. Let's talk about cryptocurrency. This is something that I'm sure is a buzz on the college campus. It's like I go out to get some steel-cut oatmeal this morning, and all I hear are people talking about Bitcoin. So what is cryptocurrency exactly?
Okay, cryptocurrency refers to digital coins. There is no physical currency that fulfill the characteristics of paper-based money. And as a standard of exchange, yes, a cryptocurrency meets that requirement. The Commodity Futures Trading Commission, though, back in 2014, didn't view digital currencies as a currency. They looked at it more as a commodity. And as of March of 2021, even Jerome Powell, the head of the Federal Reserve, stated that it was really a speculative asset that is more aligned with, it's more a substitute for gold than it is for money, which I thought was an interesting concept coming out of the Federal Reserve, and that they were not seeking to go after a digital currency, so that they could release it as a competition to anything. And just on that, as of January of 2021, I saw that there were at least 4,000 digital currencies. However, in the fiat world, where paper currencies exist, there are only 180. And it's when I looked at the digital currencies, I'm looking at the moves. And I'm not saying that you shouldn't be involved in cryptocurrencies. You do have to understand that they are speculative in nature. And what I'm looking at now reminds me very much, if you've been in the markets long enough, of what happened during the .com bubble. You had everybody who decided to get into the internet and sell internet stocks, and it just exploded. There was a tremendous value. And then after Y2K in that next year, things just started to consolidate, and you got the winners and the losers. The winners actually were the NASDAQ, but the NASDAQ lost so much of its value at that time because of the bubble. And when you have 4,000 currencies, and it's like, well, which one's going to make it? We know Bitcoin is the big dog. There are others, but you know, when you have something what happened last week or late last month, which was the collapse of Titan, which was supposed to be stable coin, and it goes from $64 to pennies, to less than a penny on the dollar.
Yeah.
There's nothing stable in it, and therefore it's not a medium of exchange. It's not a stable store of value. If you had sold, let's say you were Tesla, and you sold a car last week for one Bitcoin for $64,000, and now it's worth 29. How do you exchange the Bitcoin so that you can get actually what was paid for the car? And so I don't know if there's a roller coaster there. And part of the problem with the digital currencies comes in the how anonymous they are, that we don't know who's doing the transactions. But when you have that, you allow for things like ransomware to occur and other, so in banking, it's called money laundering. Yeah. So you have similar issues. And I'm just looking at the cryptos, and until they're able to corral the nefarious aspects of it, it's not going to grab the way that it should.
Yeah.
So I'm just looking at it as a speculative vehicle. And the thing is when you get involved with it, you have to expect the possibility of a total loss.
Yeah.
And if you're willing to do that, be involved. Just like the SEC, we're not telling you whether to buy a junk stock or a junk bond. We don't care, as long as you're aware of what it is when you put your money in, and that you're a good investor. You understand what you're doing.
Yeah. Well, Joe, there's a lot of hype, obviously, around Bitcoin, Dogecoin, Ethereum, Ripple. If I'm a college student, I might be hearing it from my friends. When you think about where an individual should be investing, we're not going to give recommendations here, but just in general, that seems like a very risky, there's no intrinsic value, seems very risky. And if I wanted to put money away, and again, you got to have that longer time horizon. I know it's kind of old school, but that's the reality. There is no simple way to get rich overnight for the vast majority. When I say 99.99% of people, investing in Bitcoin, especially in the short run, it's almost like the GameStop meme stock issue, right? It's running shorts, but the downside risk is a lot higher for some of these investment assets.
Absolutely. I mean, the people who bought Bitcoin a few weeks back at $59,000, $60,000 a coin, they will probably recover their value, but it may take years for that to come back. And it's as long as you understand that aspect to this, and you're willing to live with that volatility, then it's not something. I mean, for me, I believe in assets that have intrinsic value that will either give you dividends or capital gains, both if we're lucky, things that are going to actually that we can compound and grow, rather than just the capital gain, which is the only gain you can get on a digital currency.
Yeah, it's interesting. We haven't even broached the subject of taxation, because in typical traditional investments, there's something called the capital gains tax, right? And I know the Internal Revenue Service, this is an area that's kind of not as well fleshed out in terms of taxation when it comes to Bitcoin, cryptocurrency, et cetera. But the thing you really have to be thinking about as a novice investor, student investor, just a layperson, is not only what you're going to earn over a period of time, but also, Joe, what you might pay in taxation to both the federal and the state government.
Yes. Again, because it's a commodity. It's like any other asset that you're buying and selling. So if you make a profit, there will be a capital gains tax on it. On both in North Carolina, you're going to have it on the North Carolina taxes as well as on the federal. As a tax preparer, one of the questions that has to be answered is, and I ask my clients all the time, do you participate in Bitcoin or any other cryptocurrency? And the IRS wants to be aware of that. And I had one person who approached me and says, I don't want them to know that. And I said, well, your problem is that I'm not going to lie for you, so you're going to have to go somewhere else. If you told me, yes, you did, I'm not going to lie for you. I think that would create a problem on just so many levels. And just tell the government what you're doing. They will tax you, whether you like it or not.
Yeah. Well, Joe, I know we probably didn't do the topics justice, but it was great to scratch the surface with you on managing debt and cryptocurrency. And we look forward to having you back on the program again very soon.
I look forward to coming, and thank you for having me. And just make sure you understand what you're investing in and how you're controlling your finances.
Really great advice. Thanks, Joe. Great to see you. Thanks for sharing your perspective. That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement, markets, technology, personal finance, so much more all in one place. That's right, one place. Check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow, so until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.